and today we are looking at moving averages. So what is a moving average? Well, it is taking the price and then averaging it out over X number of time periods. And it's represented on the charts as a line, and it's a really simple tool. Literally, it is just one line on the chart that either goes up or down. And what it's used for is to identify buy and sell signals and to show the general direction of a stock and help us identify when stocks are correlated. So what do I mean by this? Well, if we look at an Apple chart here, this is over a 1-year time period, we can see a blue and a red line coming in right here, blue line, red line, and what those are is the moving averages. So the blue line is a 50-day moving average and the red line is a 200-day moving average. So if we take the price right here at 2020, January 1st, it's right around that $300 price mark. Now, if you average that price out over the last 50 time periods, that's the blue line. So what this is saying is that the average price over the last 50 time periods is about $265, and the average price over the last 200 time periods is about $220. And all that's doing is showing you the average price over the last time periods. On this chart, it's 50 and 200 days. Now, how does that help us? Well, it can show us buy and sell signals. The buy signals are when the price crosses above the moving averages, such as what happened in June here. This is a buy signal. This is the price crossing above the 200-day moving average and then the 50-day moving average. This is our buy signal. We also have another buy signal here when the moving averages cross over each other. When the faster moving average crosses over the slower moving average, that is a buy signal. That is a show that the trend is reversing and the stock is going up. So we have one buy signal here. We have one buy signal when the stock crosses above both of these moving averages. So 3 signals altogether. Great look there. And if you would have executed on this trade, you would have gone from about $190 to over $330 at the peak. Now, it can also show us sell signals. Those sell signals are the exact same, but in reverse. So when the stock price crosses below the 50-day moving average, that is a sell signal. When the stock price crosses below the 200-day moving average, like it did right here, that is a sell signal as well. We can see that it's bounced back here, but the two moving averages are coming closer together, so it's pretty indecisive, but we did get 1-2 sell signals here. However, we did have a great run from June of last year to basically February of this year. So depending on which signals you picked up, this would have worked out great for you. But we had buy signals in the beginning, we have sell signals right now, and this is up to April 13th of 2020. So pretty exciting chart here. Next one, we've got the Dow Jones Industrial over the exact same time period with the exact same moving averages. So we can see coming across the top here, it is almost consistent and steady the whole way through. The price is mostly above the 50-day moving average. It kind of bounces off the 200-day moving average a little bit. It dips in June here, but it comes right back over, and pretty steady, consistent trading all the way through up until we get to February, March, April here. And we can see the price drastically plummet through the 50-day moving average and the 200-day moving average and go all the way down below 19,000 points. It's starting to come up, but we're definitely not there yet. The reason I want to bring this chart up is to show you that these moving averages are great for showing long trends, but they are not great at showing short-term drastic changes. What I mean by that is the price crossed below the 50-day moving average. If you would have traded on that, you probably would have done phenomenally well and you would have saved yourself a lot of money. But if you didn't trade on these 2 first buy signals here and instead you waited for the third one here, you would have basically sold your stock right at the bottom. So you have to be careful how you use these indicators and the timing around each one. The moving averages aren't quite as short-term consistent, but they are super long-term, as you can see here. One more chart I want to show you is Google. Now, this is kind of a similar chart. We have steady, consistent growth all the way leading up to February, March of 2020, and then we have a drastic plummet down below our 50-day and 200-day moving average. Now, excuse me, the reason that I wanted to show this chart is because I want to show you how closely related these 3 stocks are. So we've got Google, we've got the Dow Jones Industrial, which is actually an index of 30 different stocks, and we've got Apple. Now, the reason I bring this up is because all 3 of these stocks are moving in almost the exact same pattern. When I scroll through them, you can see that it's a bullish pattern all the way to February, March, and then it drops off drastically going through the 50-day and 200-day moving averages on all 3 stocks, including Google right here. Now, the reason is because the entire market is moving similarly. The entire market is very correlated right now because of COVID-19 impacting every company. Now, however, if this was oil and gas and the price of barrel was skyrocketing and these oil and gas companies were going to make a ton of money, you would expect all of the oil and gas companies to move up, but you wouldn't expect Google to move up. So the reason I point this out is because some of these stocks move very similarly, and if you can start to pick up the trends in the Dow Jones, that's probably a very good reference of what the trend is going to be in Google and in Apple, especially if they are highly correlated at the time. So we got one more chart here. We got Tesla here. This one's a little bit different. We're coming in from the left side here at pretty steady and even trading, and then we see the price break above the 50-day, above the 200-day, and we see the crossover where the 50 actually crosses over the 200-day moving average. So we've got one buy signal, one buy signal, one buy signal. We got three giant buy signals right here, and a great opportunity to buy in November of 2019. You could have bought in at around 325 with all those signals, and you could have rode that out to over $900 on this stock. Pretty amazing just from looking at the moving averages. Now, they took a pretty drastic fall all the way back down to about 350, but now the stock's trading at about 650, and I think as I film this, it's almost 700. So pretty amazing example here. This one looks a little bit different than the three that we looked at earlier because it's a little bit of a smaller company in comparison to Apple and Google, but great example of the moving averages where we see the price cross over the 50-day, the 200, and we see that crossover of the actual moving averages. Those are three strong buy signals, and you could have rode that out to over $950 from 275, maybe 250. So pretty amazing. And a great example. Now, summary for this lesson, the moving averages help us show the general trend. They're a little bit slower than some of the other indicators, but they are great as just a visual observant for what's happening. They do provide some buy and sell signals. Those buy signals are when the price moves above the moving averages, and when one of the moving averages crosses above the other one itself. The buy signals are the exact opposite. If the price drops below any of the moving averages, it means we're seeing a trend reversal. Now, some stocks are highly correlated. For instance, Apple and Google and sometimes Amazon, they all trade very similarly to each other and to the Dow Jones. Other companies, like a biotech company, is not going to trade anything like Apple, Google, Microsoft, companies like that. So what you want to do is try and find a stock that you're interested in, find two or three that are also correlated to it, so that when you can see you think there's a good buy opportunity for your company, you can check the other ones as well. And it basically reinforces your assumption and your ideas. Now, some stocks are highly correlated, but the amount of correlation can change over time. Right now, all of those tech companies that I mentioned, Apple, Amazon, Google, are all being affected fairly similarly by COVID-19. As soon as COVID-19 is over, the correlation between those stocks could change. It could lessen, and we could be back to kind of business as usual.